Hey everyone, welcome back to the channel. So I've been doing a lot of videos about kind of self-help, trying to share some ideas that I've had, that I've been thinking about and that I've been wanting to share for a while via these videos. I thought I'd do another market update though. I had some pretty good conversations with my friends last week, and honestly, a lot has happened. So we've seen the collapse of Silicon Valley Bank, Signature Bank. The crypto related banks were not really much of a surprise because of the whole FTX thing. When the FTX thing happened, very clearly that was not the end of it all because a lot of people lost money. A lot of people had made investments. So I expected there to be contagion. So contagion in these crypto banks is honestly to be expected. But what we found is actually a number of banks are having this type of insolvency issue. So Silicon Valley Bank, Signature Bank, Credit Suisse were the most recent ones. My thought is there's definitely going to be more because the reason for the bank failures are not actually what they say is idiosyncratic, right? So people have been saying, oh, Silicon Valley Bank was idiosyncratic. Signature Bank was idiosyncratic. What they're trying to say is these banks had their own unique practices that made them particularly vulnerable to the current situation. And other banks, other institutions are not run, I wouldn't say as poorly, but run the same way as them. And so they're not going to face these same risks. I call kind of BS on that. I think that if I rewind a little bit, the big thing to pay attention to right now is the larger market cycle. Market cycle that I think has been running since 2008. And that's, the market cycle that I've shown you guys in really some old videos now where I've shown you kind of graphs and charts on where we are in that market cycle. And a lot of that stuff has happened. I didn't get the timing exactly right, but the behavior, the greed, the amount of speculation, and the amount of, honestly, fraud, I'll say it, I think it should be said more, that happened in the markets was very indicative of a wave 5, very indicative of a top of a market. So, when you have these crazy bubbles and you have a bubble on everything, it's hard to know exactly when it's going to pop. But I am very confident that it has popped now. And people are looking to get back to normal. People are looking for things to stabilize and, for good times to continue on. I probabilistically do not think that's going to happen soon. I think there's a lot of things that are stacking up, a lot of black swan events, a lot of destabilizing events that are stacking up. And it's really just the culmination of everything that's been happening the last 10, 20 years. So let me rewind back and I'll come back here. So Silicon Valley Bank, these idiosyncratic bank failures, I don't think are so idiosyncratic. I have friends, in the financial industry. I've talked to them in the past about, how their funds are doing, how they're making investments. And I was doing it because I wanted to know, get some insights on where I should be putting my money. And if you talk to any of them, people that are actually privy to information, people actually making the investments, looking and analyzing the deals, most of the deals they're allocating hundreds of millions, tens of billions of dollars into were really not good deals, right? It was cheap money. It was almost free money. And there was so much of it. The incentives of money managers were to basically grow their AUM. How do you grow AUM? You allocate capital. So as long as you have more capital and you use it and you can show on paper at least that you're making the returns that you're promising, which was easy at the time because it was a bubble of everything, they were getting more and more money and they were getting giant bonuses and, the firm's revenues were growing. So the incentives were not aligned for the long term. They're not really acting as fiduciaries for their customers' funds, right? Their incentives are to grow assets under management, make more investments, purchase more deals. And even in the absence of deals, instead of saying, hey, we can't take any of your money and allocate it responsibly, they took that money anyways, right? And padded their own pockets. So that's kind of the ugly side of capitalism. That's the behavior that you see at the end of bull runs. Other examples of that would be all the SPACs, right? So this Silicon Valley venture capital, you could say bubble, but era, culminated, with SoftBank and WeWork, and all of these events that happened in the last couple of years are not discrete points, right? They're all linked together. They're all tied together. That whole movement culminated with these SPACs, right? Companies that needed to be pushed out into the market to honestly allow early investors to exit without going through the typical vetting process of a normal IPO, right? So what's the reason for that? Why did it work? Why did people do that instead of conventional IPOs? They did that because it was expedient, right? The incentive was they wanted to unlock their funds in an efficient way. And the market was, I don't know what, so greedy, you could say, so greedy that they didn't care how they had access to these startups. They just wanted access to it, right? Everyone thought the market can only go up. So even when people presented these offerings as SPACs, which are, less regulated, or I guess shortcuts to regulation for getting an IPO, people are still willing to invest in it, right? So that really indicates, where we were in the market cycle, what people's risk behaviors were. But also, what is after a SPACs? There's really not that much after a SPAC, right? Basically, these companies that they have been grooming for years and years and years to get to the point when they could IPO and unlock their liquidity, they did that. So, the whole VC industry, I think, kind of reached its natural conclusion. Now, I'm not saying that VC is going to go away. I'm not saying startups are going to die, but I do think that was a milestone in, a quite important marker that had been driving a lot of economic growth, a lot of news cycles, a lot of financial activity and excitement for the last 10 years. And I think fundamentally, that's going to change now a little bit, and potentially with the fallout, there's going to be some regulation. And I'm not blaming startups for the financial calamity that we're in. I'm saying that it was one sector, that was one set of canaries in the coal mine, and there are so many other ones. The other one is China and Asia and property. Lei and I, we actually went to a lot of these Asian countries. We lived there. We toured these facilities, buildings, these projects. We looked at the prices. We looked at the yield. Man, none of those deals made any sense. On a global scale, would you actually put your money there? They didn't make any sense mathematically. They were really greater fool deals, right? It was, why do you want to put your money in real estate in Asia? Because that's where everyone's made their money in the past. How much yield are you getting? Well, it's negative yield, actually. You're going to put all this money out for these properties that are, compared to their Western or European counterparts, where the per capita income is so much higher, 2, 3, 4 times higher, you're going to get negative yield. People can't afford to pay the rent. There's not actually that much demand for your property where rent matches the mortgages. People are buying them anyways. And if you go out to the suburbs, we went to look in Hangzhou, the suburbs there. There are multi-million-dollar properties, and the parking lots are empty. Why? Because of the vacancies. People that had money were buying multiple properties, and never intending to live in them, and never finding a renter for them. So they were just parking their cash there, and that was honestly an expression of the lack of good investment opportunities for that capital, right? So I don't want to say too much, because it's a little bit risky for me to talk about, but China has capital controls. So their economy is distorted, right? Obviously, there are some distortions that arise when you have capital controls. As a Chinese citizen, you can only take out $50,000 of your Chinese currency a year, but you can only use that for vacation purposes, for spending. You cannot use it for actual capital allocation or investment, right? So there's a lot of distortions that happen because of that. So, the property market in China, as we all know, and even as the Chinese government has fessed up to, has a lot of risk, had a lot of risk. If you look at the property prices now, I still don't think a lot of that risk is out of the system. As I look around, I think the air is kind of out of the balloon, and that balloon is starting to drift lower, and only now are we realizing it. So these knock-on effects are delayed, right? And I unfortunately think the worst is still to come. So, the real estate in China obviously was a bubble as well, in the everything bubble. But also all the real estate in the region, Thailand, Cambodia, Vietnam, anywhere that wealthy Chinese tourists went to, including some places like US and in Canada, became hotspots of real estate investing, and they drove up the prices. And the natural demographics in that area, that people actually living there could not afford those types of properties that are being developed. But that didn't dissuade investors, right? It was really just a feeding frenzy of capital investment and trying to make money. And I think that Asia is not going to be the safe place that's been purported to us, that's been told to us. The narrative right now is that the Chinese renminbi is going to be the next world reserve currency. I highly doubt that. Because there's certain characteristics that need to be there for a world reserve currency. I think, one of them is trust and transparency, right? US is not perfect, but the US dollar is backed by a government that most of the world would say is fairly trustworthy, fairly transparent, respects rule of law. China, China marches on its own tune, right? So it has its own agenda. And with their capital controls, with their, let's say, lack of transparency, it's going to be harder for people to trust that as the world reserve currency. But more importantly, not just the political attitude of these two nations, is the amount that these global economies are intertwined, right? The Chinese renminbi, the euro, the US dollar, Thai baht, none of these currencies are so different. They're really part of the same system, right? Whenever a big financial decision gets made in the US, there's definitely coordination, with other world banks, right? So the world banking cartel is the world banking cartel. The US dollar system is the world system. I don't think any major nation, their currency or their banking system is so dramatically different than the US system, where if we saw a collapse in the US system and a collapse of the global system, that single nation system would survive, right? Everything is intertwined now. Global trade, global economies, these global banks. So, the risk of contagion is large, and there's not, honestly, as far as I can tell, a very good alternative right now in the traditional nation fiat space. So, okay, what did we talk about? We talked about tech startups. We talked about real estate, how these economies are intertwined. Let's talk about what's underpinning all of this, right? Which is debt. So for the last 20, 30 years, what has driven all this rampant speculation, it's been the need and desire for countries to grow, to use GDP as a measure of success. And how do they most efficiently grow GDP? By offering money at a discount, by offering it honestly for free, to have people reinvest in local infrastructures, in their businesses, without the need to really worry about repayment. And they've done that honestly for too long, so long that businesses, large enough ones, and markets were not running according to nature, right? They were, as to use a trait that's been used quite a bit, addicted to this free money, addicted to this sugar high of money, right? And that, as I said, has happened in every modern economy. So with the bank failures, we're starting to see that unravel a bit. And the reason is, right, the actual reason why Silicon Valley Bank was insolvent was because they had put a lot of money into bonds years ago, right? And those bonds, they mature in 10 or 20 years. And they bought in at the time with an interest rate of like 1.8%, 1.5%, something under 2%, right? And as interest rates rise, people take money out of those bonds and would rather hold new bonds because they yield higher interest. So that causes the price of those bonds to drop in value. Now, if Silicon Valley Bank were to hold those bonds to maturity, they would take back their initial principal and they would pocket the interest. But until the bond matures, there's a market rate for those bonds. And because of the rising interest rates, the market rate is actually less than the face value of the bond, right? So on paper, unrealized, they were losing a bunch of money. And as people came to withdraw funds from Silicon Valley Bank, they needed to unlock capital to pay that. And in order to do that, they had to sell their bonds at a loss. And eventually they just couldn't do it anymore, right? The well ran dry and they're insolvent because if they keep selling more of these bonds, they're going to be more underwater and they can't repay the original depositors' money. So the federal government had to step in and guarantee that. So, what was specific about Silicon Valley Bank? Sure, maybe they had some additional risk on their balance sheets because of the startup connection compared to other banks. But really, they got in trouble because of these bonds. And who else buys bonds, right? Every other bank in the world buys bonds, right? That's how they make money on their depositors. That's how they keep the lights on. That's how they operate their business. So there's not a single bank out there that is not, to some degree, in the same situation. How much and what were their margin percentages, and how much how much money is being withdrawn from the bank, and can they keep up with those capital requirements is a different issue. But a horse is a horse is a horse. They're all in the same boat. They're all facing the same thing. It is not an idiosyncratic thing. The numbers for each bank is a little bit different, but the point is the global banking system is being stressed right now. And honestly, the entire financial system is being stressed right now. So finally, let's talk a little bit about what I'm most concerned about, which is World War III. It's funny, and you might not think that to be the case, but I would say oftentimes world markets, world sentiment is tied to these global events, right? Yes, there's a business cycle. Yes, the US has its own economy. Yes, China has its own economy and its own market cycle. And, but for these bigger cycle turns, there is normally some conflation, some synchronicity with other world events. And the war in Ukraine with Russia is a big one. If you draw parallels to the previous two world wars, it's pretty easy to delineate who's on the Allied side, who's on the Axis side, right? The battle lines are pretty well drawn. And I think that these world leaders are at a point in their lives where they really want to take a stand for something. You and I, most of the people watching this video, are concerned about their family. How do they make ends meet? Maybe how do you reach your own personal goals? How do you start a business? How do you feel fulfilled by living out your dream of, opening a coffee shop or running a tech company or, whatever it is, our goals are on a personal or interpersonal level with our friends, our family, our community. These leaders have been groomed to run and manage things at the country state. And just like I have my ambition about doing something big and great and something that is meaningful, they have those same ambitions, but they're applying it for hundreds of millions or millions of people, right? On the global stage, on the nation state stage, right? And you have to think that some of these people, they're willing to risk it all to try and build their legacy, right? They have every material need taken care of already. They don't need to go and build the next Apple or Google, right? They're playing at a different level than us. What they want is honestly, I think they want their names enshrined in history or entombed in history, right? They want to go down and be remembered as someone that was great. And so, people can do amazing things. They can do amazing things when they set their minds to it. And there's not really a limit to individuals' ambition, right? When you have people in power like this, and they have ambition and are capable, otherwise they would not be in the position that they're in, you can expect some pretty dramatic things to happen. And that's quite scary because it's not what's best for humanity. It's not what's best for the world sometimes. For them, it might just be a question of what's best for their legacy, right? And that's very dangerous. And I think that unfortunately, there's been enough time since World War II, and from what I'm seeing, there's not really a rhyme or reason for what's going on right now, except that people want to make a stand, make their mark on history, because the world's a great place right now. People are living better than they've ever been, and technology is better. And yeah, there's all this financial BS, but in general, the lives of everyone around the world is getting better, right? And there's still enough resources, and I think the best for humanity is still yet to come. Yet people want to put it all and risk it all, for the boundaries of the map, the names of their country where it starts and ends, right? So I think there is going to be a lot of turmoil in the next few years, and it's going to coincide with the collapse and potential rebirth of the global financial system. That's going to coincide with changing of the guards, right? Baby boomers that are one of the wealthiest generations in entirety of history that have benefited the most from these bull runs. They're starting to retire. They're starting to pass away. They're going to change and transition in their lives. And the younger generation is going to come into power. And we have different values. We see the world through different world events. And the system doesn't really suit us that well, right? I think there's a lot of frustration from the younger generation about what's been going on. So it's natural to suspect that there's going to be some world reorganization that's happening, that's going to happen, right? So my outlook on, the next few years is actually quite dire. If I actually put my mind to it and analyze the future events, and I look at the charts and I look at the trend of what's happening, I wish it weren't the case. I don't want to give you guys the wrong idea. I'm not trying to fearmonger. I'm not hoping that the world collapses and I was right, or I don't want any of that. I would rather the world just be stable. I don't want crazy inflation. I don't want crazy deflation. I have positioned myself and my family to the best of my ability to function in this environment. The last thing I want is crazy turmoil, crazy upheaval that could, set us back to the Stone Age, or disrupt or break anything that we've worked so hard to build. But that doesn't change the fact that if I look at the writing on the wall, I think that that's unfortunately where we're headed. Okay, so there's a lot to talk about. Even on these potential topics, there's so much more that I would like to delve into. What does that mean for the markets? What does that mean for the economy? What can we do personally? Well, I don't think the markets are done from correcting. So I do believe that the markets are going to correct further. Eventually, we should reach a point where there's too much pain to handle, and the governments are going to attempt to do what they've done in the past, which is to inflate markets and rebound us, buoy us, and print money, right? The problem is, how many more times can we print money, and how much more money do they have to print, and can they print for us to still feel good about the currency and for no bigger issues to arise. It sure feels like we're towards the end of the road, right? So I don't know exactly what would happen. I'm personally trying to figure out where is the next best place to store wealth. I don't think it's in the stock market. I don't think it's in the bubbles of bubbles. Meaning crypto short term, housing short term, cars short term, watches short. I mean, any of this stuff that is non-productive or that's really overvalued clearly is not going to make a good store of wealth in the short to medium term. Maybe gold or maybe crypto eventually, like Ethereum or Bitcoin, is the way to go. But getting the timing right for that is going to be quite difficult. Real estate is something that I'm still very interested in, because I believe if the average individual owns one house and you're able to own 10 houses, you should be on a relative basis in a better position than that individual owning one house, right? So I think that that's going to stand the test of time. Doesn't mean that the USD price of those assets is not going to fall or fluctuate dramatically in the next few years. And like all things, it's hard to avoid the tsunami. We're in a boat on the ocean, and all of our neighbors, all of our friends, our bosses, people that would be above you and next to you or below you, honestly, we're all in the same boat. We're not the world elite, or maybe they have like a rocket ship and they're not in the ocean the same way that we are. I don't believe that people act so irresponsibly by choice. In the bubble of bubbles, your incentive is to participate, because if not, you are left behind, right? So there are structural reasons why people behave and act a certain way, when these crazy market cycles happen. So I think it's going to be quite difficult for us to actually avoid the catastrophe. But at the same time, we can only do what we can do. I would not spend too much time thinking about this. I would make some small preparations, but I would optimize for the old world order for now, which is to continue doing what you have to do, being cautious, looking out for more signs of cracks in the system, and being tactical. So if you have a bunch of money in the banks right now, I would split them amongst multiple bank accounts so you're under that FDIC limit, right? Honestly, there's only so much we can do. I am interested in crypto as an alternative. Finally, the reason why crypto was invented was as an escape hatch to the current financial system. There's a lot of volatility. That's a big risk. So I'm not necessarily advocating it right now, but when I look on a global scale, what kind of alternatives exist, that's maybe the only alternative that's semi-detached from the global economies, right? Um, so we'll see. You know, I wish I could put a more satisfying conclusion to this video. I know it's been a pretty long video, and it's me really pontificating about what I'm seeing around the world, and I wish I could give you more actionable advice. I'll do a video update in the future when I know what I'm going to be doing. As I said, right now I'm just being tactical, so splitting my money, de-risking, staying out of assets and markets while I wait for this thing to deleverage. And I don't think we're there yet, so I'm not in a rush to buy back into the markets. I don't think we're going to go back to the moon, and I think it's going to be years. I really think it's going to be years until this all settles out. So yeah, stay safe out there, guys. I wish you the best of luck, and I'll keep you all updated. If you found this content useful, please subscribe, like this video. Let me know what you think in the comments. Let me know if you have any questions or if you have any suggestions for topics you'd like me to talk about in the future. That's it. See you guys in the next video. Bye.